Hello, everybody. We wanted to share with you our 2021 investor outlook. We have an agenda that we would like to cover with you. These are the two main points. We're going to talk about the equity market and give you an update on it. And then we're going to give you some information that we can use to look forward to. So the area that we want to remember is that there are 5 key areas of financial planning that we always keep in mind. One is to preserve our preservation planning. The second is retirement planning. The third is tax planning. The fourth is estate planning. And the fifth is investment planning. These areas are comprehensive to financial planning, and they're customized just for you. So we always look at these when we're talking about your particular needs. The equity markets in review are very interesting because when we go back to the first quarter of 2020, we see this huge drop in the market, but it also was a huge comeback. Interestingly, it was the biggest market drop of this century, and we also had tremendous gain back. Why was the drop? Because of the COVID, and then we had responses from government, the stimulus, the Federal Reserve, and then people started looking at the markets very optimistically because of the vaccine and other situations that were coming due. So this is the main point that we wanted to make here, is that those who stayed the course, didn't get nervous, didn't sell off, were well rewarded. And that's really the decisions that we have to make when we see a situation. It was a well-rewarded event. This is a very thoughtful look back, because if you take out the 24 top performing companies out of the S&P, the S&P 500 actually would have been negative. But when we look at things, we have to remember that these particular stocks made up for so much. So as long as we were involved with them, we were fine. The Federal Reserve added some stimulus to the economy, and that has been a pledge that they've given through the year 2023. The pledge was given by our former chairperson, Mr. Powell, but we think that our current chairperson will continue on with that course. Congress added $3.5 trillion into emergency relief in 2020, and as you know, we had more enacted this week. So it's a huge amount of money. It's the biggest packages ever given in the world, and this is one of the reasons that we see the market rebounding so well. Note too, the interest rates for bank money markets are 0.09, and a 12-month CD average 0.16, unacceptable for people to invest in fixed markets. There was a huge disconnect, though, between the economy and the equity markets. People were losing jobs, businesses were closing, and yet Wall Street continued to make all-time highs. Why was there such a disconnect? Because the markets are looking ahead. They are not looking back, but they're looking forward. We do feel that the COVID-19 news is part of the reason that we're seeing things happen the way they are. The statistics are starting to come down, but not significantly. Current hospitalizations are very high. Daily deaths are very high, and daily case increase are very high. Everywhere you turn, this is the news that we see. So it does make it very difficult to be optimistic. But this is one of the things that's happening. Because of the vaccines, we've seen the 3 major ones have been approved in the United States, and people are starting to get these vaccinations. This makes a difference because people, instead of focusing upon the COVID, they can look forward to an end to COVID. However, we still recommend that investors proceed with caution. Why? We want it to be centered on your personal goals, not on the news. We want to make sure that your timelines are involved with your plan. This is the principle that we have to go by, so we have to be careful. We've also had a new administration that has provided this new $1.9 trillion stimulus. We anticipate tax increases. Vaccine distribution and trade agreements are going to change, but we see good things. So we will continue to monitor these situations, and if anything is in particular that we need to talk about, we will share that with you in a newsletter. A lot of people were concerned with the party change and what that will do to the markets. This is a chart that shows 10 of the last events where it was a Democratic-controlled Congress and White House. And out of those 10 years, 8 of them were positive. So we hope that the 9th one will be the one that we're in. Analysts have an outlook for 2021. I'll share those with you. Barron's surveyed 10 market strategists, and they were saying that the markets will be up. They expect the indexes to rise between 9 and 10%, dividend yields to be around 2, and the stock market as a whole will deliver 10 to 11%. This is very, very standard, very typical. They are also saying that the gross domestic product will increase this year by about 5%. We hope this optimistic review will occur. But again, COVID-19 is at the center of the bounce back. So as these are widely distributed, we should see job increases. And with job increases, people will have more money. We still have uncertainties though. What does the future hold? We just have to see what they will be. What happens if COVID distribution isn't as good? What happens if there's other major economic news that's negative? We have to be prepared for that. So that's why we are still taking a very cautious approach. Key takeaways. 2020 was a year that was rewarded if you were disciplined. Interest rates are at an all-time low, and there's a disconnect between the economy and the equity market. The new administration is bringing different approaches, providing new challenges, and COVID-19 recovery is critical to investors. So we want to be vigilant, we want to be cautious, we want to focus on personal goals and objectives. Please, please, always, always call us with any concerns. Peter Lynch, the very famous investor, said, you get recessions, you have stock market declines. If you don't understand that it's going to happen, then you're not ready, and then you're not ready, you won't do well in the markets. His point, plan, be careful, and let's keep a vigilant eye out. What can you expect from us? Regular reviews, regular communication, and more frequent discussions. As we look at any changes in tax law, estate law, and investment issues, we will inform you of those. So we thank you for giving attention to this very brief presentation. We love the fact that we can provide assistance to you with your financial needs. Your health matters. Your health and well-being is our highest priority. So please take good care of your health. We also want to point out to you that we offer a client benefit. As a client of our firm, you can add names to our viewing list for these workshops. So please share. If you do provide 3 names, then that means you will be eligible to our January meeting that we have in 2022 at the very special event location that Jessica's working on. So we're looking forward to that. And we would love to just reiterate, please call us if you have any question. We love to help you. Thank you very much.